Well, g'day there, traders. Thanks for joining me in this Monday afternoon market recap. What I'd like to do is take a look at the Dow Jones Industrial Average, the S&P, and also the Nasdaq. Just talk about what is actually setting up. We have seen quite an influx of bearish sentiment coming into the market, as you can see, which is represented by these two fairly impressive bearish Morobozu candlesticks, so what we call long day candlesticks. These are not the candlesticks you want to be seeing when you're at a resistance level and you're expecting or wanting to see the market break out bullish. Not to say that we haven't capitalized on this downside movement. All you need to do is take a look at Starbucks, take a look at AXP, and take a look at HD in the past 3 days to see what our students have been doing, thanks to our Pivot Point Pro analysis class, which we hold over the weekends. But really what we expected to see in this market was a definitive break above, let me just get this into perspective, a definitive break above 16,665 for a bullish sort of arbitrary trending market, or a breakdown below 16,014 to really continue and set us up in this sideways consolidation, which you can see, which I'm drawing on my screen. What we expect to see is a sideways moving market if we do break down below 16,014 points on the Dow Jones Industrial Average. What you can see actually is that we're just testing the 50. Now, the actual slope to these exponential moving averages is almost nil. So what I mean by that is that if you have a clock, we're really sloping at an angle between 3 and 9, all right? So it's almost completely horizontal, and that's not what you want to see during a bullish moving market, all right? And we're getting very close to breaking that 50 and at least coming down to the short-term support level around 16,112. So if this 50 doesn't hold, expect the market to come back down at minimum, down to this intraday low and also the support level down here on the Dow Jones Industrial Average. It's also a really good position where the 100 simple moving average is also going to come in, and that's also the long-term trajectory and long-term support, as you can see highlighted, where markets tend to consolidate and then bounce from as we continue in the direction of the primary bullish trend. So that's a very, very good target. Let me just zoom back in on the detail. If in fact this market just continues to retrace, look for the market to make a definitive trading signal right here. If we do break down below 16,014, we do have some incredible lower lows. We're looking at lows down around 15,700 as a bare minimum. This is old support. All right, then we've got lows down at 15,400. Then we've got the primary trend line, which is going to come in effect around 15,300. We'll analyze that if in fact we do break down, but these are just really good targets to have on more so a monthly time frame, maybe the end of April if we do break down, if not May 2014. This is where the market will be trading into. And then we'd obviously reanalyze what the market's doing and set ourselves up for a bounce off this trend line or a complete failure, and really what we would call a transition into a potentially bearish market and outlook for the remainder of 2014. Again, we're getting a little bit of ahead of ourselves, but these things are all sort of brewing on the horizon, stemming from really these two candlesticks taking place on the Dow Jones Industrial Average. As you can see, if we are setting up a consolidation, a sideways consolidation, we are getting the bearish cross on the stochastics. The RSI is absolutely tanking, and we just have that bearish MACD histogram cross. So all three of these oscillating indicators are in agreement. Generally, when they're in agreement and we're failing support levels, that is when markets really take the elevator down, right? You've heard the saying, the market takes the stairs up, so it's a nice slow steady move up, but it's quite a sudden crash in retracements or at least bearish moves. Well, this will be the case below 16,014, so please keep an eye on that trigger, right, on that contingent trigger to enter into put contracts. Again, the ADX and the CCI really aren't telling us much. The ADX was turning up, liking this little bullish move, but since then it's turned down with these two bearish candlesticks, and the CCI is tanking below that 100 signal line, so it's telling us the market doesn't want to trend. How does this, pardon me, apply to the S&P? Again, you can see we've got a basic bracket trade above 1,901, below 1,828. This has been sitting here for the better part of 2 months now, much like the Dow Jones Industrial Average. Once you get these triggers set, you simply just have to be patient, remain disciplined, and then capture the breakout when it occurs, either if it breaks up or breaks out, or in fact if it rolls over and breaks down. You always keep a non-directional bias when you approach the markets. It's the best way to really trade the markets. So again, we're sitting on a knife edge here. We're sitting right on the 50. We're sitting on a support level. We've got this trigger set at 1,828. That'll break these swing lows. It'll break that support level, and really the next target is going to be a quick move down to 1,810 or 1,809 on the S&P if in fact we get there. The Nasdaq also Technically did trigger as of today around 4,068. It wasn't a close which we want to see. So any movement, however, below the low of today's candlestick will really be a good selling opportunity down to these swing lows around 3,975 on the NASDAQ. So that's a really good support level. If in fact, now this is where it gets interesting, if in fact this doesn't hold, we break this support low or this swing low established in February or even late January 2014, then we really do have some incredible lows. We're looking at 3,825, then ultimately down here at 3,675. At this stage, we would have retraced back into, let me just zoom out and bring up a weekly and change to a, let me get out of that template, let me just bring up a weekly. At that stage, we would have moved back into this second fan line. So you can see all of these, bullish touches coming up through here. Well, that would be a really good, let me just redo that so we can get this into better perspective for you. It doesn't want to do it, which is really frustrating. So you can see since establishing the low of the market in 2009, you can see all these touches, what we call a fan line. That will coincide really, really nicely over here with that continuation of the trend line. And that'll be a really good opportunity for a new bounce and bull market. All right, so they're lower lows on the NASDAQ, but please, again, we're getting ahead of ourselves. We need confirmation at or above or at or below these two triggers before we start getting overly bullish or bearish. Until then, remain neutral. All right, and just let the market come to you in due course. Again, really amazing trades which is setting up. Apple, again, starting to break down two triggers, 507 and 552 on the bullish side. Amazon, let me just work this out. Again, coming down, we've hit our first target at this 327.60 breakdown. I would say exit your positions right now if you already haven't. That is a really fantastic target. If not, if you do have the kahunas to hold to 310, that is not me, but that could be you. At least tighten your stop and lock in a profitable trade. AXP absolutely tanked today. This was a stellar trade, which a lot of our students got into today. Fantastic. We're a couple of pennies away from our first target. Congratulations. Baidu again, beginning to break down. This one has been a cash cow for us right here and again right here. But I'm remaining neutral on this. Okay, I do think we will get a little bit of support around here before we bounce. So keep an eye on Baidu. Caterpillar again. We had 2 days to exit out of your core positions from this bullish breakout. You trade two targets. That's why you do that. All right, you trade to your targets. And again, we're just getting a bit of a pullback. This could be a bull flag and we could break out bullish. There is declining volume. Interesting, but we do have earnings coming up. FAS looks like a triple top, head and shoulders. Doesn't matter what you call it. Neckline is 86.27. Keep an eye on that bad boy in case it breaks down. Google, again, breaking down below. Both of our triggers, really nice trade, but we said we'd leave it because of earnings. So I wouldn't expect anyone to be in Google. HD, again, breaking down. Textbook breakdown. Really, really nice. 78.25 was the original order. Fantastic trade. JPM, again, not doing a whole lot. You should be stopped out of JPM. Earnings is coming up. The same with Netflix, again, not too much to talk about. Starbucks, you should have exited today. The market moved 1 cent below our contingent order, so you would have been triggered out at the all-time or the ultimate daily lows, which is fantastic. Absolute lows on Starbucks. You should have liquidated those put contracts, and that was a fantastic trade to finish with. Again, we've got XOM appeared to be breaking out. We have what we call a rest after battle or a falling 3 mat hold. So we had our stop here at 97.06. That did get triggered today, so you should have been stopped out of this position for, I think, like a 45-cent loss. Put that into perspective. A 45-cent loss on XOM, when you make 72.52, when you make it, $2.40 gain here on Starbucks, when you add in another, $2 here on HD, and you add in another, another $2.25 here, you're getting risk reward ratios of about what's that? $7 in profits to 45 cents in a loss. And you can start to see how these rewards really stack up and provide your trading account with quite a nice boost in the way of capital. So all the best, everyone. Thanks for looking at this market update and actual individual trade analysis. I'll see you on Wednesday. That's probably the next time I'll do an update if in fact the market decides to move above or below the triggers which we just spoke about. All the best. Goodbye, everyone. See ya.